So today we're going to talk about PayPal and can it reach $100? And my answer to that is yes, it can. And I believe there's actually 3 ways that it could potentially get there. So I thought I'd talk about PayPal because I've seen a lot of questions asked because the share price hasn't really done anything over the last kind of 12 months when a lot of other stocks have been performing well, the S&P's been performing well. So where is PayPal at the moment? I think it was deserving of an update. So I hope you enjoyed the video. Hopefully if you're watching this after 10 o'clock, England are through into the final. We'll see what happens. But we'll get started on today's video. So PayPal currently at $59. Year to date, the stock is actually down 4%, and over the last year, the stock is actually down 14%. So the stock hasn't really done anything, and for me, this is a stock that I own. It's one of my top five largest positions. However, it's my worst performing top 5 position. It has not performed anywhere close to the likes of DraftKings, Google, Hims & Hers, Mercado Libre or Meta. PayPal has lagged behind them stocks at the moment. And I think a few people have got to the point of view where they've held it for a year now and they're kind of like, I'm getting a bit bored. The stock is not really doing anything. Why is this happening? And that was my first instinct right away, is that why are people asking me to do a video on PayPal? And the reason why is because the share price hasn't done anything. I feel like if the share price was up, everybody would be happy with PayPal. And that's the big thing, is don't get caught into the share price and dictating is that stock a good stock because of the share price performance. Now, obviously, granted, it's nice if you've got a stock going up. It feels a lot better having a stock that goes up, but it isn't always the full story. Share prices do not always reflect the financials, and that's the big thing to remember. And I think a few people got a little bit greedy with Nvidia, seeing stocks like Nvidia going up day after day after day, up 179% year to date, and going, oh, look at that, I might as well go all in Nvidia, not realizing maybe something that's building in the background with Nvidia is maybe this is getting a really rich valuation for Nvidia. Let's be a bit careful about it. Probably worth a separate video on that, and how a lot of the S&P is being propped up by a few certain stocks. And don't get caught into that. It's like 2021 all over again, where people get caught into chasing things and not realizing actually that sometimes could be in a little bit of an overvalued territory and the opportunity is maybe somewhere else. So I think a few people are getting caught up in the share price and not actually looking at the financials. Now for me, I'm actually quite happy with how PayPal's doing, and for me, I still believe PayPal will reach $100, and I'm going to show you 3 reasons why, and then I'll show you some numbers why it could reach there. So the first thing that I want to talk about is the numbers. First thing is financials. If you've got a stock that is financially improving in the right direction, will the share price go up? Now, very quickly, I'm going to cut back to the whiteboard for this, which I don't normally do halfway through a video, but my example is, imagine you've got a company that's doing 3 billion in revenue, and let's say that company goes up to 4.5 billion revenue in the next 3 or 4 years. Let's say the profitability goes from 1 billion, let's say it goes to 1.5 billion in the next 3 or 4 years. Now, if you look at this company here doing these financials, and then you look at the company doing here these financials, which company should be valued more? Should you value the company more here or here? You value the company more here. And that's the key thing, financials. If the financials are moving in the right place, normally you're going to get that shown on the share price at some point. It doesn't always happen straight away. Sometimes it can take a little bit longer, but 99% of the time, if a company is moving financially in the right direction, the company will be valued more. And that's the key thing when you look at PayPal. Now, there's a few other things that we'll talk about that could sometimes change this, like the valuation, but we'll also mention that in a little bit. But that's the key thing, is look at the numbers and go, if it's valued, if it's doing these numbers here, and it does these numbers in 3 or 4 years, is the company going to be worth more? 99% of the time, yes, it is. And that's the thing when you look at with PayPal. If you look at the numbers at the moment, is everything moving in the right direction? Yes. EPS was a beat by 0.18. Revenue, 9.4% revenue growth. A lot of companies would die to have that revenue growth. This is a very, very good growth. The important thing as well is total payment volume was up 14% as well, which is very good. Now, the only little thing is the EPS. You could argue, okay, the EPS is going to go down slightly this year, and you can see it's going to go from $4.76 down to $4.24. But next year it is going to recover back up to $4.07. The reason why is there was a couple of payments that helped in 2023. So you can see a GAAP EPS did include a 0.24 gain from the sale of Happy Returns and approximately 0.14 from PayPal strategic investment portfolio. I think there was also maybe one other thing that kind of took a benefit here. So actually, when you take out this, the EPS is still moving in the right direction, which I'm happy with. So when you look at the financials, everything is moving in the right direction, and in fact, it's moving very well in the right direction. You know, a lot of people talk about PayPal being a dying company. I see no signs of a dying company here, because you've got a company that is doing numbers that there's so many companies out there that wish I could do these numbers. You go ask Nike right now. You go ask Nike and Starbucks and all the other companies right now, do you wish you had 9% growth at the moment? And they would snap your hands off for that growth. The numbers are still very good and moving in the right direction. Normally, you'll get rewarded with this in the longer term. Now, the other wild card you have here is Alex Chriss. Alex Chriss is the new CEO that's come in, and if he gets the things that he's wanting to do successful, focus on the small businesses. You can go and have a look at when he did the PayPal Investor Day not too long ago, and he talked about focusing on profitable growth, the small businesses side of it. The other wild card in all of this is Alex Chriss. PayPal has normally been a very decent company, but now you've got a new CEO from a very successful business, which is Intuit. If he gets any of these numbers into his business and these numbers get even better now, you're definitely onto a winner. And that's something else that you have to kind of factor in here that I had to mention at some point. The other thing that you're going to have, in my opinion, is you've got a stock you've got a wild card with a new CEO that looks like he's doing very well on the financials. All the numbers are improving in the right direction. You've got a company that's financially doing very well, and then you've got a company trading at a historic low valuation. So if you look at a PE ratio, it normally trades in around the 30 times earnings. We're currently all the way down at 16 times earnings for PayPal. It's half the valuation of what it normally is. Now, granted, you could say, well, it's growing a little bit slower than what it historically has done. Fair enough, but does it deserve to be half the valuation what it normally is? I don't think so. So you've also got a company at a very good valuation. You've got a company doing premium numbers at a below historic valuation, and also a below market average valuation. I believe PayPal should be trading at 20 times earnings. So you've got a company growing in the right way. I think you've got potential for multiple expansion on this business as well, and also that goes down to the point of view when you look at the price to free cash flow is also in a very good place from a valuation point of view. But the other thing is that people say right now that PayPal not doing anything for the last year to date is down 5%, the last year it's down 15%, and people are getting fed up about it. But I'm not getting fed up about it. In fact, the longer the company stays at these levels, I actually get more bullish on the business, because the numbers are improving. And yet I'm getting the company for the same valuation. But also what's going on with PayPal in the background is they are throwing off good amounts of profitability. They're currently throwing off, 4 billion-ish a year. The balance sheet is pretty strong. You look at the balance sheet, they sit on 53% debt to equity. The cash pile is around about 14 billion. That's a very healthy cash pile. If they're generating 4 billion a year and they're sitting on all this cash here, and the share price isn't doing nothing while the financials are improving, you know what PayPal are going to do? They're going to go buy back stock. In 2024, they're currently planning to buy back 5 billion worth of stock. Now, 5 billion worth of stock is nearly 10% of the whole market cap. And if they're throwing off 4 billion in profitability a year with this balance sheet, do you know what that's going to give them more chance to do? Is if this company stays at 60 billion or 61 billion, they're going to have so much potential to buy stock back. And as you as a shareholder, you own more of the business. And obviously the numbers like the EPS guidance looks a lot better as well because there's less shares outstanding. Everything looks better. So if anything, you shouldn't get frustrated at PayPal not doing anything. You should look at that going, yeah, if the share price stays longer and they do these financials, my bull case is only getting stronger, and yet the share price is staying the same. And PayPal itself can go back and use all the profit it has to buy more shares back at these levels. If PayPal stays at $58 for 2 years, that's not a terrible story. As long as the financials get better, that's not terrible. Because if they then put another 3 billion a year into a stock repurchase program and they buy back, let's say, another 6 billion of stock in the next 2 years, you've already got a 5 billion buyback on, which will take it around to a 56 billion market cap company. You add another 6 billion on top of that, you now got a company that's 50 billion market cap. You've had like over 15% of the company bought back. That's amazing. So if anything, you shouldn't really be bothered about the share price being down. You should actually pray for it to be down. So the amazing thing here with PayPal is that you've got financials that are very good, especially for the valuation. You've got a potential for a multiple. I've skipped one there. You've got Alex Chriss, the wild card, that looks like he could potentially drag that profitability up a little bit, maybe the revenue up a little bit. You got potential for a multiple expansion because it's a below market average valuation for a company that's doing above market financials. And then you have the thing of that they throw off so much profitability and amazing balance sheet that they're going to potentially buy back 10%, 15% of the company in the next couple of years. What's not to like there? So if anything, with the share price being down, I don't understand people negative on that. If anything right now, I'm getting more bullish as the stock stays at these sort of levels. But going back to the original point of the video is that can PayPal come a $100 stock? Well, let's have a look at some numbers here. So looking at some numbers here, which are basically the same as when I did it about a year ago, 5%, 8%, 10% revenue growth, profit margin of 12, 13, 14%. Now, historically, the company has stayed around that sort of profit margin. I'm going to take the whole COVID years out of it. They're currently doing a 14% profit margin right now. Imagine if Alex Chris gets some of his efficiencies up and that puts it to a 15, 16% profit margin. But you can see here they're normally being around about a 14% profit margin. So I think that's a about fair profit margin to assume with, in fact, on the lower end, I've even gone lower than 14. I think on the higher end, maybe I should go, let's say that Alex Chris works some of his magic and he gets that up to a 15% profit margin. Multiple earnings, I put 20. I think this should be a market average valuation at least. I think you could talk about a premium for this business. I think if you're doing 8-10% profit margin, I think you should be trading more than that at 20 times earnings. And if I look here, on the low side, you got 50. If they do 5% and 12% profit margins, you'd be disappointed with that and you still make money on it. On the mid-size, you're even getting nearly 100% upside, and I've also factored the share buyback on the bottom number. On the mid-side, you're even getting close to the 100% upside, which would obviously put you to $100. And on the high side, you're even above that. So can it reach $100 in my opinion? Yes, as you can see here. Like I said, I even think we talk about multiple expansion. I don't think this company, it should at least trade at 20 times earnings in my opinion. But realistically, I would not be surprised to see this company trade towards 25, 30 times earnings. And if it does trade more towards like 25 times earnings, that's where you do get some really big upside on the business if it does have that bigger multiple expansion. But I'm not going to assume that. But if it does, that's where you get a real big winner with PayPal. So we'll see if that does happen. But even without the multiple expansion or a big multiple expansion, I think with the buybacks, the growth, yeah, I just think that if anything, the longer this share price stays down here, you should be more bullish on it, especially if the numbers, as long as the financials hold up and keep doing what they're doing. In my opinion, you're onto a winner. So yeah, I do believe PayPal will be a $100 stock by 2028 in my opinion. And yeah, if anything, the more it stays down here, the more I'll actually consider buying some more shares in it. So I hope you enjoyed the video on PayPal, guys. It's been a while since we talked about it anyway. If you could, hit that like button. I am thinking about potentially doing, I actually turned 30 2 weeks ago, and I'm thinking about doing a special Patreon sale for me turning 30th. I'll get into my 30th. Makes it sound like a big achievement there. If you do want to see potentially a little bit of a mini sale, I'm talking about a flash sale, like maybe 2 days on the Patreon, a year subscription for maybe £40. I don't know. Let me know in the comment section. If there's enough comments about it, then I might do that anyway. But thanks for watching, guys. Hit that like button. I'll see you in a bit. Come on, England.